Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about this week's news as it relates to current events, finance, taxes, maybe none of that stuff, but what it always is from the perspective of accountants. And I'm Ty Carr. With me today are two other accountants, Tammy Hess.
Hello, everyone.
And Charlie Zigman.
Hi, everybody.
What are we going to be talking about today? Well, people seem to continue spending through the recession. Then shrinkflation. Will consumers notice less Halloween candy? Crypto reporting is being addressed by the Financial Accounting Standards Board. And finally, spreadsheets may not work well for accounting for leases. All right, well, we'll kick it off today with Charlie.
I've got an article we can talk about from the Morning Brew called Americans Continue to Spend Despite a Chorus of Recession Warnings. And so what's happened is that a Bloomberg economic model has forecast a 100% chance of a U.S. recession within 12 months. Jeff Bezos warned companies to batten down the hatches in response to Goldman Sachs CEO saying there's a good chance that we'll have a recession. And not sure how much value you can put on this, but Elon Musk guesstimated that we are going to be in a recession probably until the spring of 24. And so the article goes on with a couple of different examples of people basically agreeing that we're going to be having a hard time. And so what's kind of interesting is that you would think that that would mean then that there would be a big dip in spending as people try to save and try to get ready to, as Jeff said, batten down the hatches. But instead, what's happening is that people are continuing to spend and people are continuing to buy. And it turns out that even when prices go up, people still need to eat and do all of those other things that they're doing. And so, I just think it's interesting because in the article, it makes a big point about, basically that connection between the recession and changes in spending. But I guess from my perspective, it feels like while those two things are definitely related, there's also a big disconnect because so much of what people spend money on is not something they can really have any, decision about. And so regardless of whether the prices rise, they're still going to buy milk, they're still going to buy bread, whatever those things are. And so I just want to get you guys' take on kind of two things. Which is it? Or do you feel there's a recession inbound? And then do you feel that these changes we see in spending are, even actually related to the recession, or if people are going to just keep doing what they're going to do regardless of what happens in the economy?
I find this very interesting because I've asked the same question myself. It seems like when we go out to eat, it's still kind of crowded, and the roads are still quite busy at the various times that that people are kind of out and about doing things and everything costs money these days, right? So I think in the first part of the question, do I think we're headed into a recession? I would say that. Or I do say that I can't say for sure. I wouldn't claim to know for sure whether we're headed in a recession or not, but I think it's probable. I think it's probable that we're going into a recession. The thing that I think is a huge unknown is I don't know that we know what this recession will look like. And I think that gets at the point of kind of this topic that you brought up, Charlie, which is, does a recession mean that people spend less on the things that we're all watching? They still have to spend the money. I think unfortunately, what I suspect is the case is that it's very difficult to dial back the habit of spending money. And so I think before we see spending curtail, we'll see debt levels rise. So we'll see consumer and credit card debt go up until it hits its apex. And then, when people have no other choice, then maybe we'll see a curtailing of spending at some point. And so I don't know where we're at in that cycle. Like, has that already happened? Has credit card debt nationally already gone up significantly? Things of that nature. But
I think that's a really good point, because one of the naysayers in the article about recession was the American Express CEO, who's basically saying that people are continuing to spend what we're used to them spending, which I think fits perfectly with your point.
Yeah, I think the other thing that's an interesting kind of perspective on this is just timing, right? So, like, if you think about the fact that we just spent a lot of, last 2 years and 3 years in terms of the pandemic and kind of the working from home, the not being able to go out, not being able to do that, and so now I think while people are obviously seeing that the prices are increasing, there could be a potential of recession. There's also this perception that, hey, I kind of want to be going back to normal. I want to be able to go out. I just got the ability to go out now to have, to go out to dinner, like Ty said, in a more open area. We, drive and go to various different places. That to now being like to ratchet it back probably feels a little bit. They're not ready for that yet, right? And not that anyone's ever ready for a recession per se, but I think that just the timing of things of the world kind of opening up again, that people aren't ready to kind of go back and start saving and not going out to lunch, not and adding to the list of here's what we can't do now again because of now of a different reason. So I think Ty's point is 100% correct. Is most likely we're going to start seeing, the spending kind of obviously maintaining itself, and then debt going up, and then all of a sudden it's going to be like, oh, I can't spend because I maxed out my credit card. Now I can't do this. And so I'm going to wait till I absolutely cannot do it versus preventing it from happening. And I think that that's what most people are facing at this point.
No, I think that's exactly right. It'll be interesting to kind of see how people cope with it as we get through it. And yeah, we'll be here for it. So, do you have another article we can talk about, Tammy?
Yeah, I do. So, over the years, you may have seen articles about shrinkflation, which is defined as reducing the size of a product to adjust to rising production costs or market competition or inflation. Back in March, there was an article from Food and Wine that warned us that we should expect 5 less chips when buying a bag of Doritos, and or 28 less crackers when buying a box of Wheat Thins, both of which were causing some frustration to consumers. Well, according to an article from the Washington Post, we are starting to see the shrinkflation in our Halloween candy. In some cases, you may be seeing a reduction of the number of candies in a package. And in other cases, the actual candy size is smaller. The article states that the reasoning behind the candy shrinkage is partially due to shrinkflation, but the other part is due to trying to reduce calories. So over the years, manufacturers of salty and sweet treats have been focused on reducing calories for Americans. The article does give some interesting information on both increasing prices as well as the effort that companies have taken to be more transparent on helping reduce the calories for Americans, especially in trying to combat the obesity and the sweet treats that people are eating. But at the end of the day, the main message is candy sizes and packaging are shrinking, but the prices are remaining the same. So it seems to me that the article is trying to, reduce the frustration of shrinkflation with providing justification in terms of the cost that have been increasing and the efforts in helping Americans count their calories. But is this too much information or not enough? Do you think that people are still going to be frustrated with the idea of shrinkflation?
Yeah, I do. I think when people are used to getting a product and then they go back to the store and try to buy that product and get something smaller for a similar price, they're upset. And I think that will always be the case. I also think that anyone who's really doing their math right in terms of like understanding the cost of a product, shrinkflation wouldn't work on, because if you're actually like thinking about what you pay per whatever you buy, then you'd basically be accounting for it. And so it's a type of price increase that preys on the people who are buying the product to not actually pay attention. And so to me, it just seems a little bit disingenuous. And that's also just frustrating because I've seen so many things. I don't know, me personally, but seen different products that are substantively different today in size than what they were at some, prior point in time. And not really a great reason for it other than just hoping people won't notice that they've shrunk the product down while keeping the price the same. What do you think, Ty?
Yeah, I agree. I mean, I think there is a small market for people who want to like sample things and maybe, you know, want to have it at a lower packaging or a smaller size, just because that helps them with managing themselves. I put myself in that category in the sense that, I'm not a I'm not a huge candy eater, but I like the idea of trying and tasting different candies, particularly around Halloween. And so, I wouldn't be so sensitive to to the fact that the price is the same, and I would somewhat appreciate the option of having candy in a smaller size that isn't adding to my girth at the same time of being able to try a bunch of candy, right? But I think I'm in the minority. I think generally, like particularly people who maybe buy a Snickers bar all the time are going to notice that the Snickers bar is a quarter less than it was before, and not like that point. So yeah.
Yeah, I think for me, it's going to be hard to please everybody. I think at the end of the day, prices are increasing. So either you're going to have to take a price increase in terms of what you're buying, or in order to help that, the manufacturers are taking it upon themselves to just, short the potato chip bag 5 chips in order to keep the prices the same. And to, try to say, I think the point that I don't agree with is you hope that you don't notice, because I think that people are going to notice that, right? So like, you might as well just be transparent and say, yes, hey, I am going to have to shrink the packages, because the fact that if I don't, I'm going to have to increase the price, and we made this selection on your behalf. I think the same thing goes for the reducing the calories or giving you options of a sample and making it a smaller size. I think just being transparent, saying, hey, that's what we're doing. To some people, that's going to be great. If you are a person who's watching your calorie intake and you're like, hey, I want to, I don't care if I pay the same price for something because I need to manage, or if someone needs to help me manage what I eat, then that's great too. But I think it's also just being transparent about it, right? So it's giving the people the option and the knowledge of why something's happening versus why something's not. I do think that it is interesting, to do this after the fact is probably the hardest part in terms of trying to help frustration, because now, I mean, Halloween candy's been out on the shelves for months now, right? So I think people have already noticed, and now seeing this article, it's like, well, it doesn't help reduce the frustration, because I was frustrated last week when I bought the bag of M&Ms or whatever you want to eat. So I do think that what this is trying to do, and maybe it is a little bit kind of behind the times, and maybe do a little bit more forward, is just talking about here's the reasons why, and hope that people understand and help relieve the frustration, or here are things to come, because it started with the bag of chips or the wheat thins, but now it's going to the Halloween candy. You're probably going to see it when it comes to Christmas candy, or it's just going to go on and on and on. So hopefully people don't get too frustrated, or at least know why they are being frustrated. Good. So I think Charlie, you have our next article.
Sure. Yeah, we've got an article. I know you guys have all been clamoring for this, so we can finally let everybody know what our crypto losses are, because in CFO Brew, there is an article called Accounting Standards Board Clears Up Crypto Reporting. And so what they're talking about is that companies can now share the late 22 gut punch misery of being a proud crypto owner publicly. What's been going on is the Financial Accounting Standards Board may have finally cleared up a long simmering confusion about how companies should account for the cryptocurrency assets on their books. And they basically reached a tentative agreement to allow companies to use fair value accounting for crypto assets. According to the article, until now, there have been no clear specific standards for reporting crypto assets. For accounting and reporting purposes, crypto assets like Bitcoin and other digital currencies have been treated as intangible assets, much like intellectual property or brand value. Intangible assets are much more difficult to accurately value and often don't show up on the balance sheet. FASB does still need to vote on the proposal to make it an official reporting standard, so this is not maybe locked into stone just yet, but a FASB spokesperson declined to comment to Wall Street Journal about when that would happen, so they don't have an exact timeline. But I kind of want to open it up for discussion about, just what, in your guys' opinion, is the most fair representation of a crypto asset. Because you could say, one argument could be fair market value, another argument could be cost, another could be something else altogether, net realizable value or something else entirely. So I just want to get you guys' opinion on, do you think this is a step in the right direction of crypto reporting?
I think reporting crypto assets at fair value is reasonable, assuming I would, yeah, I haven't looked at the standard, but I think it might depend on whether there is a readily ascertainable fair value from is there a market for that crypto asset where it can be exchanged readily for cash, and that can establish what that fair value is reasonably, then I think that is a good way to do it, because like any other assets, the all assets that are carried at cost on the books are misleading by being carried at cost. So I'm a proponent of carrying everything at fair value that could be carried at fair value. It's just that when your classic intangible assets, for example, don't have ready markets for them. So, while it would be more informative in a hypothetical world where you would know what the fair value of your intangibles are, when you can't objectively measure that fair value, that goes down a whole nother rabbit hole. So I think cost is a necessary compromise to the higher ideal, which would be, if we could measure the fair value of everything, it would be great to have everything at its fair value. So the fact that there are markets where you can kind of see what a crypto asset would be worth today for cash, I think means, to me, I think that is the way to go with this. I agree with that. There is another piece of it, and I don't know if it mentioned in the article or not, in terms of, if you're going to state an asset at fair value, there's a question as to where you mark that unrealized gain or loss, where that adjustment ends up. Does it end up in the P&L and the income statement, or does it get parked through the balance sheet or through other comprehensive income in some way? And I think that would be kind of a secondary kind of reporting and transparency issue with this kind of accounting.
That's a great question. The article does talk about how the proposed standard would allow companies to report crypto as a financial asset and to record losses and gains on the balance sheet as they happen. And so it's still maybe a little unclear, because you could say, does that actually mean that we're still going to show them on the P&L? We're just going to adjust the balance on the balance sheet? Or, like you said, those gains and losses actually sit also on the balance sheet? So yeah, I would just say it wasn't super clear.
Yeah, but I mean, regardless, and for context for our listeners, other asset categories under generally accepted accounting principles that use fair value accounting will do it in different ways. In some cases, it will go through the P&L, any adjustment to fair value, and in some cases, it bypasses the P&L to adjust the asset to fair value, depending on exactly how that particular asset is categorized. And so that may still be yet to be discussed in this proposal, but at very least, regardless of where that fluctuation in value gets reported, getting the value on the balance sheet to fair value, I think, is a step in the right direction, assuming if my assumption is correct, that there are ready markets available to tell us what the value of these things are.
Yeah, I think that this is all interesting, and what's even more interesting to me is like just how confusing it is in terms of how to account for cryptocurrency, and so for folks that actually own some and how they're reporting on it, to make sure that they are keeping up to date as to the proper accounting treatment for it, where they should be parking the unrealized gains or losses, or realized gains or losses, and all that kind of stuff, to make sure that they know what they are kind of working with, because it does seem like it's something that's been, like Charlie said, a little bit muddy and a little bit unclear in so many cases for various different things, that getting an understanding of that and doing the research, if you are have it on your own, to do that, and if not, to reach out to a professional to help get some of that information, so that you're treating it correctly.
Absolutely. No, I think it'll be good to kind of see as more and more clarity comes to this issue. I think we'll get to kind of learn from the companies as it goes, and yeah, we'll see how that all goes. Do you have another article we can talk about, Tammy?
I do. So I stumbled upon an article from Accounting Today titled "Spreadsheets Are Not Free," which, of course, as an avid user of spreadsheets, caught my attention. The author of the article began by sharing how she uses spreadsheets for business as well as in her personal life. She even impresses people of all ages with her spreadsheet skills. However, with the new accounting or new standard for lease accounting, when it came out, she realized that spreadsheets were no longer the best option for everything, and maybe even questioned her love of spreadsheets. Most of the article seems to be focused on why spreadsheets do not work for accounting of leases, and recommends implementing software as a solution. However, peppered throughout the article, she does refer to some issues that I thought that would be interesting for us to discuss. So the first was issues with security. Anyone can edit formulas or data within a worksheet. There isn't really a good way to audit changes or detect errors in the formula. Human errors. It is way too easy to edit a spreadsheet. One simple mistake can throw off the entire spreadsheet. And then there's also concern that people are making spreadsheets too complex or complicated, which causes a significant amount of time in maintaining or tracing formulas. So as I mentioned, the article is primarily focused on utilizing software for lease accounting, and the author of the article may be a little bit biased. If you take a look, you might see why I say that. But do you think that there are, the issues that were raised should be addressed when using spreadsheets in general? What do you think?
I think this has been this is a classic accounting conundrum in the sense that there are yeah, I haven't seen how spreadsheets are being used for the lease accounting, and whether, I think the issues cited that could be problematic in using spreadsheets for lease accounting are the same issues that you see with other um, generally accepted accounting principle rules for various accounting treatments. So revenue recognition in the software world for, dealing with deferred revenue, do you do that in a spreadsheet or do you use a software for it? Tax accruals are a very complicated set of algorithms and rules that are applied to figure out your accrual for income taxes on your financial statements. Classically, it's done with complex spreadsheet models, but there are software companies who have built versions of this to eliminate all the same things that this article is talking about with regard to lease accounting. So, that's what this reminds me of, is it's that same argument that that you're going to eliminate mistakes through a software that standardizes the inputs and cannot, your user cannot change the calculations and so on. And I think that can work fine. I think it depends, like from what I've seen, the revenue recognition type software implementations work really well. The tax accrual implementations don't work as well. And the reason for that is because sometimes if the rules are complex enough, it can be hard to audit and really follow the details of the algorithm that is embedded in a software that than it can be actually to follow along with what's happening in Excel spreadsheet. And sometimes then the operator or the accountant needs the flexibility of manually adjusting what's happening on a spreadsheet in real time in order to get something to ultimately the correct answer in time for a reporting deadline. And I think that's one of the main reasons that a lot of companies didn't immediately wholesale adopt tax accrual software solutions instead of spreadsheet models. I haven't looked at this in the lease world, so in the leasing scenario. So yeah, be interesting to me whether the leasing scenario is more like the revenue recognition scenario or more like the tax accrual scenario in terms of the propensity for needing to do a kind of manual work to get to a right answer in a short timeline because you can't figure out how to use the built-in algorithm of the software to get to the right answer. So those are some of I think that's some flavor around this issue where I've seen it in other contexts. Yeah.
Yeah, I think it's a really interesting one because, on the one hand, I do somewhat agree with the author in the sense that I think there are a lot of things that could be done in a spreadsheet that are better positioned as software because they're just more manageable. And I think a really good example of this would be like TurboTax, right? You could do your taxes in a spreadsheet, but that tool is built for it and has gone through so many iterations that you would be silly to waste time trying to recreate that spreadsheet. Now, on the other hand, I think if you're going to implement a software-based solution, kind of your prerequisite is that you would have to understand the issues that lead into it first. And so a lot of times when we say this, the Excel spreadsheet actually has these issues and there are these errors and so on and so forth, what we're actually noticing is issues in our own, not us personally, but issues in understanding the underlying problem, which by the way would still potentially apply when using a software, because even if the software does all math for you, you don't see it, you're still being presented with an answer which you either do understand or you don't. And so for me, I mean, I'm biased because I took a lot of time to learn some of those features to the hot button issue that they're pointing out in the article. So I feel like I know what to do to stop the things she's saying. But I just think there are a lot of people who don't want to do that and shouldn't, and would be better served by spending their time elsewhere and then leveraging the tool that's works better for their purpose. I just wish I didn't have to hear it from the guy selling the lease accounting software. That's my only Great.
See, so you told them why I thought that the article was, or the author was biased, but yes, she does give her title in terms of what she's currently working on, and it is about the software company side of things. But I think, like with anything, it depends. So I mean, Ty had a good point in terms of really it is dependent on what you're going to use it for and how complicated you're going to make it, and to review it, in terms of it's not an all or nothing type of situation where you say I'm automatically going to go straight to using the software because of XYZ, or because of the calculations could be difficult or the error prone or whatnot. But it is looking at, if I have one lease, maybe I'm not going to buy a software. Although the article does say even with one lease, you probably should. But again, they were biased. But I would say take a look and see what you're doing and what you're needing. And if you do need it and you're wanting to spend the time and money investing in a software for that, then go ahead and do it. But don't just assume. And I think to Charlie's point too, you can't rely solely on either an Excel worksheet or a software. I think you do need to ensure that you have done your due diligence of understanding what the information is supposed to be telling you, so that you're doing that fact check anyways to make sure that there's not an error with the software or an error with the Excel worksheet. Because I think the kind of what some people end up doing, especially with the software, is like if it is wrong, then they just put the blame on the software system that didn't do the calculation. But that doesn't get you off the hook that the information's wrong, right? So you need to understand what the data inputs are and that it's spitting out what it's supposed to be spitting out. So like anything in life, it does depend, and it's worth a conversation, in my opinion.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for watching. Thanks for listening, and tune back in again next week for more business updates from an accountant's perspective. And also check out our sister podcast, Profitless on Purpose, where they're talking anything and everything relating to the nonprofit space. Thanks, everybody.
Bye.
Everyone.